Most people who hear that Anthropic just hit $47 billion in revenue assume that money is sitting in the bank. It is not. That number is a run rate. One strong month multiplied by 12, and the company just filed to go public at a price near $1 trillion while telling you almost nothing. I am Professor Erica, and last time we put SpaceX's trillion-dollar price tag on trial. Today we do it to the engine of the entire AI boom. By the end of this video you will know what a run rate really is, whether $965 billion is grounded, and why you cannot even buy this thing yet.
Michael here, and I will gladly take the bull side because the product is genuinely real. Anthropic makes Claude, and it just filed a confidential draft to go public. Confidential means the ticker, the price, and the date are all still hidden, but the momentum is undeniable.
Elena here, and I am going to stress test every number on this stage tonight. Start with that headline. $47 billion is a run rate, not real revenue. Just one recent month annualized out to a full year.
Emma here, the neutral one, and Elena is right about the math. The revenue actually booked at the end of 2025 was about $9 billion, not 47. And full disclosure, the four of us literally run on Anthropic's model, which is exactly why we will be harder on this number, not softer.
Factor analysis of information risk. And here is where I'd push back. This is not a company with no product and no customers. Anthropic sells Claude to roughly 300,000 business customers, and more than 1,000 of them spend over $1 million a year.
And here is the catch nobody mentions, Michael. You, the person watching this, cannot buy a single share of it. It is still a private company, so an ordinary brokerage account cannot touch it.
Which is exactly why this rhymes with our SpaceX episode. Both are near trillion-dollar debuts where a giant valuation sprints out ahead of any audited number the public can actually check. Same exact question, now pointed at the heart of the AI boom. We are watching the same movie twice in a single month.
And to be clear, this is not some random rumor, Erica. Anthropic hired Wilson Sonsini, the very law firm that took Google public back in 2004. This is serious blue-chip preparation, not a publicity stunt.
So that is the whole fight in one breath. A genuinely fast and genuinely real business, wearing a near trillion-dollar price tag built on a number most people misread. We are going to settle it piece by piece. Coming up, the one accounting word that changes everything, plus the bubble question hanging over AI, and whether you should ever risk a dime on a bet like this. First, that $47 billion number.
This is the single most important idea in the whole video, so let me slow all the way down. The word that changes everything is run rate. Get this one concept, and you can see through almost any AI headline this year. A run rate is simple. You take the most recent month of revenue and you multiply it by 12. It is a projection of where you would land if that one month repeated all year long.
And that little assumption is doing enormous work, Emma. It assumes that hot month repeats 12 times with no slowdown, no churn, and no price war. Annualizing a curve that is still going straight up flatters the present enormously.
But look at why people are excited, Elena. The run rate went from $9 billion at the end of last year to 14 in February, past 30 in April, and to 47 by May. That is roughly 5 times in 5 months.
It is a stunning curve. I will give you that. But here is the part the headline buries. The money actually booked over the last year, the trailing number an audit would confirm, is far below $47 billion.
And this is where the whole valuation debate is quietly decided. At $965 billion over a $47 billion run rate, you get about 20 times sales, which sounds almost reasonable. On the real trailing revenue, that exact same price is 50 to 100 times sales, which sounds completely insane. The entire argument is hiding inside one accounting choice.
So both of us are quoting a true number. I am quoting the run rate, the forward picture of a business that is exploding. Elena is quoting the trailing actual, the conservative picture an accountant would sign.
Exactly, and even Anthropic's own backers admit run rate is not the revenue public companies report. So here is the rule for the rest of this video. Every single time someone says 47 billion, the very next breath has to be this. That is a run rate, not money in the bank.
And if you want the even harsher version, look at the quarters instead of the run rate. The revenue actually reported in a recent quarter is a few $billion, nowhere near 47. The run rate is racing ahead of every audited number we can actually see.
And that one distinction reframes everything that follows. The bull is not lying and the bear is not lying. They are standing on two different definitions of the same word, revenue. So let us put the actual valuation on trial. So let us put that $965 billion price directly on trial. Is it genuinely grounded in reality, or is it priced for years of absolute perfection? Michael, you go first.
Let me make the strongest bull case because it is better than the skeptics admit. Yes, the price is enormous, but you are buying the fastest scaling software business anyone has ever seen. Real demand from real companies is what is driving it. Look at one product, Claude Code. It went from nothing to roughly $2.5 billion annualized in under a year, and more than half of that is enterprise. Anthropic planted its flag in software engineering, the single most valuable thing AI can do right now.
And give the bull this too, Elena. Two of the largest companies on Earth are underwriting the whole thing. Amazon is putting in $5 billion now, with up to $20 billion more, and Google has committed up to 1 million of its own chips.
And right there is my opening, Emma. Read that the other way. Anthropic is spending tens of billions of dollars a year on computing power it has to rent, and it is deeply unprofitable underneath that growth. Here is where I really push back, though. The thing it sells is commoditizing fast. The price of a given level of AI intelligence has collapsed from tens of dollars to under $1, and rivals are cutting prices even further.
The frontier still commands a premium, Elena. Being the best coding model is worth real money.
For now, Michael, and here is the catch that worries me most. Its suppliers are also its rivals. Amazon and Google fund it and host it, and they are building their own models to compete with it, which means its costs and its competition come from the very same place.
And it is not just Elena being gloomy. One of the most famous bears on Wall Street, the investor who called the housing crash, is publicly betting that this entire AI boom is a bubble about to pop. Smart people are on both sides of this. And remember, Anthropic is not even alone at this altitude, Michael. Its rival OpenAI was last valued near $850 billion and is expected to file too. Two near trillion-dollar AI labs are racing to Wall Street at the very same moment.
So the honest summary is a knife edge, a spectacular growth story on one side, a brutal cost and competition problem on the other, and a price that only works if the growth never slows. Which raises the bigger question hanging over all of this: is the entire AI wave real demand, or is it money chasing its own tail? Stick with me, because the next part is the one nobody wants to look at directly. Now we reach the part that hangs over this entire debate, the circular money machine. Is this genuine demand, or just a very clever magic trick? Elena, I know you have been dreading this one. Walk us slowly around the circle.
This is the part that keeps me up at night, so let me lay it out plainly. A handful of chip makers and cloud companies invest billions into the AI labs. Then the labs turn around and spend that money buying chips and cloud from those very same companies. It is a circle, Michael. NVIDIA announced $100 billion into OpenAI, which then builds data centers stuffed with NVIDIA chips. Anthropic sits in the same loop, funded by Amazon and Google, then promising them $100 billion back in cloud bills.
And the danger, in one sentence, is that those Nvidia and Amazon dollars going around a circle can look like fresh outside demand. When the money is partly recycled, the boom can look bigger than the real customer appetite underneath it.
Hold on though, Emma, that cuts both ways. Real customers are paying real money here. Amazon and Google are not charities. They invest because they believe the demand is genuine and durable.
Then compare it honestly to the dot-com bubble, because the parallels are loud. In one way, it is worse. The spending on AI this year dwarfs the actual revenue, with hundreds of billions going out against a tiny fraction coming back in.
But in another way, it is much better, Elena, and this matters. The leaders today actually earn money. The companies powering this boom throw off enormous profits in cash, which the dot-com darlings of 1999 never did.
And the honest framing is that bubble and real technology are not opposites. The dot-com crash still left us Amazon and the modern internet. The likely outcome here is both at once a genuine revolution and a painful shakeout of the weakest players.
Even the people building it say so, which is telling. The head of OpenAI openly admits a bubble exists. The founder of Amazon agrees it is an industrial bubble, then says buy anyway because the good ideas will pay for all the losers. And the sheer scale of the spending is hard to even picture, Michael. OpenAI alone has committed something like $1.4 trillion to data centers against roughly $13 billion in actual revenue. That gap is exactly what the bears keep pointing at.
So the question is not whether AI is real, because it plainly is. The question is whether these specific prices are right. And that is a measurable thing we will all find out over the next 2 years. Which brings us to the two questions you actually came here for. Who can take Anthropic's crown, and can you, the regular viewer, even buy a piece of it?
Now the two questions you actually clicked for. Can Anthropic hold its lead? And can a regular person even buy into it? Let us take them in order. Start with the competition, because Anthropic is not alone at the frontier. Its biggest rival, OpenAI, is larger in users and is expected to risk, audit, compliance, enterprise to file for its own public offering. These two are sprinting to Wall Street at the same time.
And the giants behind them are scarier still, Emma. Google owns its own chips, its own distribution, and a balance sheet Anthropic can only rent. Meta is giving its models away for free, which caps how much anyone can ever charge.
Here is where I push back, Elena, because the moat is real. Anthropic took the lead in enterprise coding away from Microsoft's own tool. Being the best in the highest value workload is a genuine, defensible position.
Real but narrow, Michael. That is my whole point. The lead is one product deep in coding, and every rival on Earth is now aiming straight at it. A narrow moat is defensible today, not forever.
Now the question that actually matters to you watching, can a regular person buy this? And the blunt answer is no, you cannot, because Anthropic is still a private company. The pre-IPO door is open only to accredited investors. That generally means an income over $200,000 for 2 years, or a net worth above $1 million not counting your home. Most people watching do not clear that bar, and that is fine.
And here is the warning that genuinely matters, Emma, straight from the company itself. Anthropic has publicly said that any sale of its stock its board did not approve is void. Anyone selling you pre-public Anthropic shares may be handing you something worthless, or running an outright scam.
And if you do want a sliver of this theme honestly, there are legal doors. You can simply own its public backers, Amazon and Google, who each hold a real stake. Or you can buy a fund that already owns a slice of Anthropic. It is diluted, but it is real, and it is not a scam.
So even as the bull, I have to be honest about the timing. If you wait and buy on day one, you usually pay the popped price, not the offer price. And history says that first day pop very often gives a chunk of itself right back.
So the patient move, the one the data quietly rewards, is to wait for the real filing. A confidential draft hides the audited numbers, but a public filing must appear at least 15 days before any roadshow. That document is the referee, not the hype, which finally brings us to the verdict, and to the only question you can actually control. So let us land this honestly. So after all of that, here is where I land as the referee. The question everyone asks is whether Anthropic is a buy or a bubble, and the honest answer is that it is the wrong question. Two things can be true at the same time.
Both things really are true, Erica. This is a strong, fast-growing, genuinely real business. And at the same time, its price assumes years of nearly flawless execution with no stumble. You do not have to pick one of those, to be honest.
So if it were me, here is the framework I would actually use for this or any hyped bet. A speculative position should stay under about 5% of your total investments, money you could lose entirely without it changing your life. And one single unlisted name should be a slice of that 5%, never the whole thing.
And the deeper point, Erica, is that you cannot responsibly size a bet against a pile of unknowns. We have no ticker, no price, and no share count. We do not have a date or one single audited financial number. Sizing into that fog is not investing, it is guessing.
And here is the part that quietly removes the panic, even for the bull. If you own a broad index fund, you may already own a sliver of Anthropic through its big backers, Amazon and Google. You do not have to chase a thing you cannot even buy.
And that is the real lesson hiding in all of this, Michael. If you believe in AI but not in this exact price, you diversify the thesis, not the single name. There are a dozen calmer ways to own this revolution. You do not have to bet on one unlisted trillion-dollar company.
And when it finally does list, respect the two traps, not just one. The day one pop is a trap, and so is the lockup cliff around 180 days later, when insiders can finally sell and supply floods the market. Patient money simply waits out both of those windows before it ever buys a single share.
And the cleanest tell of all is patience itself. The audited public filing is the referee, and it has to show up at least 15 days before any roadshow. Let that document, not the headline, be the thing you actually react to.
And honestly, even Microsoft shows you how fast this whole field moves, Erica. Its own coding tool was overtaken by Claude in a matter of months, and fewer than 5% of its customers even pay for the AI add-on yet. The ground can shift under any of these companies overnight.
If you forget everything else from this video, remember one line. A $47 billion run rate is a promise, not a receipt, and you never bet the rent on a promise. So tell me in the comments. Do you think Anthropic is worth $965 billion, or is this the top of the AI bubble? So here is the whole debate in one breath. Anthropic is a genuinely great, genuinely fast business, and at nearly $1 trillion it is priced for a future that has to go perfectly. Both halves of that are true.
The builder in me still sees the most important software company of this decade. But I will respect the price and let the audited numbers prove it, instead of chasing the hype.
And my one job was to remind you that a run rate is not revenue. 47 billion is a projection, 9 billion is what actually landed, and the gap is the entire bet.
My honest takeaway is the calm one. You cannot even buy this yet, so the smartest move is to learn the numbers now and wait for the real filing later.
This is Professor Erica. Thanks for watching and signing off.